Welcome on board Lakshmipathy Deenadayalan, the CMD at 5-Star Business Finance, joining in on the show right now. Lakshmipathy, great to have you today on ET Now. Thanks for joining in. As I see in your quarterly numbers, your AUM grew by about 43% in Q3. What are your own expectations of what you plan to clock in Q4, FY25? And do you believe that you would have to revisit then the FY24 guidance of 35% growth?
Yeah, good morning and thank you for this. As I'm being keep telling in your channel that opportunity for catering the uncatered segment of this country fits into that. So having said this, our growth is always going to be robust. So we guided 35% growth for this financial year, and we stick on with that guidance. And hopefully we'll complete better than that for this financial year.
While your AUMs have risen sharply, disbursements have largely remained flat on a sequential basis despite the festive season. Are you seeing any concerns for growth slowdown in any of the pockets?
Nothing. I think there was a little short of disbursement comparing the AUM growth. There was some kind of unseasonal or weathers in two big states for 5-Star. One is Tamil Nadu and Andhra. You would have seen in the news on the Tamil Nadu getting flooded, and that got impacted in coastal Andhra too. So we had a minimal loss in few days in disbursement there. That is why you see that disbursement was comparing to the last quarter.
All right, morning. And what is the outlook for growth beyond FY24? Is the market opportunity large enough to continue to support such high growth, even on a large base?
Yeah, market opportunity is large, no doubt about that. But there are a few points which is running in our mind. One is this exuberance credit growth, what we see in unsecured small ticket short-term lending, which is a cause of concern for regulator. So we have to see how the regulators are looking lenders in bold and how does they feel. That's an important point, an important call any lender has to take when they look at next financial year. The opportunity is big. As I said, we are catering into an uncatered segment. So there is no issue from an opportunity perspective. So we have to time it well, and we have to be a little cautious when the entire lending space seen by the regulator as very exuberant. So keeping that in mind, we are optimistic, and we maintain our guidance 35% year-on-year growth.
Okay, you're maintaining your guidance. And what about your cost of borrowing? Because that has declined at a time when most companies are experiencing a rise. Is the majorly secured nature of your book giving you some sort of an advantage?
Yes, absolutely. Being a fully secured book, our quality of asset is very good, and capital adequacy is less of 50%. And so that lenders find very comfortable lending to 5-Star. So as you see from the presentation, our cost of funds have on book have come down from 9.7-ish level to 9.6-ish level. Even though the risk weightage has gone up, a banker lending to NBFC. So that circular hit somewhere in the November month. As we speak, till January end, we were borrowed close to 1,500 crores. Fresh money that's coming from bank to 5-Star. The cost of fund has not gone up much. The incremental cost of fund was 9.5%. That has gone up to 9.57%. So just 7 bips, even after the impact of the RBI's November month circular.
And, at a time when we're seeing a lot of banks rationing credit, how is it that you're managing your borrowing costs? What's the outlook as well on your net interest margins?
The net interest margin will keep coming down. That's not a concern, because as you keep borrowing more, as I said, the leverage of the company was around sub 1% last year. We have moved up to sub 1 times last year. We have moved up to 2.2 times this year. So more debt has to be borrowed. So the leverage is there. So that your NIM will get contracted. There's no doubt about it. Our guidance on NIM always was around 14-15% in the steady state. So there'll be a contraction in NIM because the borrowal from the banks or the debt borrowal is going to be in the upside. But the outcome, what you have to see, the return on equity, which was less than 16% last year, we were at more than 17% this year. So as your leverage goes up, your return on equity goes up. As your leverage goes up, your net interest margin gets contracted. So there's nothing to be worried about the net interest margin, seeing a slight drop in our Q3 numbers.
Okay, one last question. If you're sounding so confident and if operationally things are looking up, then can I say this 35% growth for FY25 should be north of at least 40?
Because I lost your voice in the.
No, my voice itself is gone after budget, so please bear with me. Too much of talking.
So you're talking about next 3 years or what?
No, I'm talking about next 3 years CAGR. I mean, if you're so confident, then why just stay at 35%? It could easily be 40%, 45% for next 3 years.
So first of all, let us under-promise and over-deliver. That's the way in which we wanted to go. From an opportunity perspective, Nikunj, I clearly with you that Five-Star can do more. But as I said, the regulatory environment has to be also seen in, so that regulators should be comfortable that each and every lender of this country are not exuberant in moving ahead. So keeping those things in mind, we still feel 30-35% for next 3 years. It's a very meaningful growth for Five-Star.